Good day everyone. Welcome to this week's edition of our weekly mentorship video, and this is where we're going to be focusing on what we are looking out for in the coming week, which levels, which zones are we going to be monitoring on our charts. And remember, we focus on the four main assets that we look at, which is dollar index, fiber, euro USD, and we've got the precious metal, gold, and USD JPY, the yen. So to begin with, I'm going to be looking at dollar index. I'm going to try to be as quickly as possible and straight to the point so that we don't have a very long video. I've realized that not many people do watch the videos to the end. So let me just be short and precise, straight to the point. So looking at dollar index, the past 2 months, we have seen dollar rally into a major supply zone, and then it drifted off bearish to the downside. And when I say major supply zone on the dollar index, I'm talking of this area here. Let me just highlight it. Right, this is our major supply zone. So we saw price reaching out for, let me just mark out the price, which comes in at this down candle here. This is our supply zone, which was breached here and price tumbled, and then price came back. Remember, we were looking for weakness coming into dollar index when price reached the 99.50. So we saw price rally for the past 2 months. It rallied into that major supply zone, right? And then there was rejection of higher prices. We never saw the 100 that we were aiming for on dollar index. So there was a rejection of higher prices, and then we saw $10 bearish from that supply zone. This was aided also by the fundamentals that were in the market, particularly for the current month. See, this is a monthly chart, and if we are to look from a monthly point of view, the current month has seen a lot of weakness coming into dollar index due to the fact of the coronavirus. Mainly, that is the main contributing factor to the weakness that has come into the dollar index. So now, with that in mind, what then should we be looking out for? Right, I've highlighted the major supply zone which price has reached out for. Now, if you look from a monthly point of view, we are now also testing short-term demand areas. We have reached short-term demand zones whereby you'll be looking for price to bounce a bit to the upside. You'll be looking for momentum to turn to the upside a bit. But in this case now, in this kind of environment that we are trading in at the moment, that's going to be very hard to back up. You see, it's going to be very difficult to back up short-term long trades to the upside, right? Because if we were to look at the fundamentals during this weekend, today and yesterday, we have seen more cases of infections being reported in the United States. This in turn will only further enhance more weakness coming in to dollar, right? We've seen more people getting infected. We've seen the death toll rising in the United States. Yes, it's not much. It's like a few cases that have been reported, but that in itself, you see, is going to enhance a more bearish outlook for the dollar. And with the Fed cutting the rates last week Tuesday, yes, that was to calm the markets down so that they can feel like they are in control, but it shows the other side of the equation that, okay, they had to do an emergency cut. Why? Markets are not looking good at the moment. So the sell-off in the stocks is definitely gonna continue. The sell-off in the yields is definitely going to continue, particularly the 10-year yields. So you need to pay attention to that. So for the coming week, we are definitely going to continue with the bearish outlook on dollar index. From a monthly point of view, yes, dollar is in a strong bullish uptrend, but the way it rejected those higher prices from the 99 price area shows that sellers now are looking to capitalize in the market because of the coronavirus, because of the Fed cutting. Remember, we've got the Fed's meeting again on I think it's 18th of March, and there's further outlook that they might keep on, they might cut more basis points. I'm not sure by how many, whether it's going to be 2.5 or 50 basis points. I'm not sure how many they're going to cut, but with the outlook, with the forecast, that is what the market is showing us, another cut probably has already been priced in. So now we are bearish. We are going to continue to be bearish on dollar index. Now I'm going to highlight our closing price from last week. Our closing price came in at okay, let me highlight our closing price. It came in at 96. You see, 96.055. That was our closing price on dollar index. Now if you look at the short-term demand again, where price had this short rally here, right? If you look at this candle here, this candle's close came in at 96.010, right? We've got this guy at 96.055. We got this one 96.100, the closing price, right? Now the reason why I'm highlighting the closing price is because it's a strong price point in this drop, right? It's a very strong price point because it's strong bullish, right? This is a monthly candle, right? We're going to go to a weekly, then you can see exactly what I'm talking about. So we need to take note of that closing price due to the fact that we had a smaller rejection of this demand here, right? That means buyers here, buyers who had jumped into the market here at this zone here, they tried to push price up here, but they couldn't push it any further high. Now I'm going to drop down to a weekly chart. Now we are on a weekly time frame. Now looking from the weekly time frames perspective, the past 2 weeks, strong bearish from the 95 price zone, strong bearish. You see, this wasn't even hard to look to see. You see, for most price action traders, you read the price, you see already we are testing this zone for the first time. We are testing this area. Definitely you would have expected price to reject, right? And mixing up with the fundamentals that are in the current market conditions, this was a very easy trade, which most of the guys in the mentorship group already know. So now we close at 96.055, sorry. And look at this price action here. Price dipped down into demand and rallied, but it closed above. Right now we closed below the demand zone. Let me grab my tool. So this is a short-term demand, right? So we've got a short-term demand which is coming in at what is this price area here? So that's 96.53, right? 96.53 is the short-term demand zone that has been breached, right, with price. Now if we are anticipating further weakness coming in to dollar index, that is the level that we need to look at. That level is the most interesting level that you have to take note of in the coming week. Yes, we can measure this drop here, you see, but it doesn't really qualify as a swing point whereby you're going to be looking at 97 as your area of interest, or you can measure the drop from supply zone all the way. But now with the conditions of the market, I don't see dollar index returning back to 98.50, 98.60 for us to start looking for shorts. You see, that means we're gonna miss what opportunities that come with the market, right? And we don't want to do that. So 96.50, 96.53, this price area, you see, the one whereby the price drop down and where they rally into a major supply, right? So this is the area where we're gonna be hunting for short trades. Remember, I'm on a weekly chart and we're expecting further weakness into dollar index. Yes, the market can open, right, and it can continue tumbling without going back to that price zone. It might not trade to this zone here, right, prior to market open, and market is definitely going to open with gaps. So it might open with a gap to the downside and then keep on tumbling to where? To this range here, or to this range here. But this range here has already been tested. Yes, there might be a gap, but you can already see that price has already sniffed 94, 95 price area. So now if we are to expecting bearish movements, bearish momentum coming into dollar index, further weaknesses, 96.50 is going to offer us better opportunities to short the market to the downside. 96.50, and you can also consider 96.85. Let me highlight 96.85 and then you're gonna see why. 96.85 is coming in here. You see this down candle here? That was our bullish order block. Right, and then I put my price marker there. Right, so we're looking at about 96.90, 96.80. So you see the range that I've highlighted, this range here. Right, this is the range where I'll be anticipating further weakness to come in. Yes, market has dropped down massively the past 2 weeks, but expect a bit of correction. You know, market cannot just keep tumbling without correction. In those weekly candles, the last 2 weekly candles, there is corrections to the upside, right? So you have to expect that on lower time frame, say on an H4 or on an H1 time frame, you have to expect those corrections to the price zones that I've highlighted. You see? So now I'm gonna drop down to a daily time frame. Just zoom out a bit. Right, Now you can clearly see. You see the price zones that I've marked. Now we are on a daily chart. Look where this candle, the price zone that I marked on a weekly chart, the 96.92. You see the interest in it? Price drops down massively and had a bounce, it came back, push to the upside. You see, short term demand zone in a higher time frame, bullish momentum, right? But it was breached here, right? Breached and price traded above and then dropped down into another short term demand area. Now we have traded away to back to our supply zone and we drop down, right? Yes, some people are gonna consider, they're like, no, but Ivan, why don't we consider this bearish order block here? You see this new level that was created here, this push to the upside, that's what I'm expecting to happen here. I will expect another push to the upside whereby we form another new zone to trade from. But now from a daily perspective, there is another level that you have to look at, which is coming in at this candle here. It's coming in at let me just zoom in a bit. Fortunately, my price point doesn't want to come through. Right, we're looking at 97.10. Reason why I'm saying 97.10, guys, because it's an institutional price zone. So 97.10, the price zone between 97.10 and 97.30 is going to offer us also better opportunities if price retraces to the upside, you see. But the shaded area that I've highlighted, this area here, is our best chance to load more short positions to the upside. But yes, it can trade all the way back to 97.10, 97.30, right? If you are to load positions in our new supply zone, the supply zone that I've highlighted, that means your stop loss is way above 97.35, you see. So now we have another interesting level to watch out for on daily. So that's the 97.10 and 97.35. So these levels that I'm highlighting is levels that you have to look out for, right? But now market can just open and then it keeps on tumbling. So now I'm gonna go to a H4. Right, let me zoom in a bit. You see the correct, can you see here? This is the area that I've highlighted on a daily chart. I highlighted this area on a daily chart. Now, what is that? You see that green candle there? What is that candle? That's a new level of supply where you should look to trade from, to load more short positions. You see? Because that's an order block for you to be looking for short trades from. The last up candle before the drop, right? You see, the last up candle before the drop, that's your order block. You see, same thing happened here from a daily time frame. The last candle, you see what opportunities came in. Market did offer, it traded up. You see, the candle did form here, right? That green candle on daily time frame, it formed there, then traded to the downside. Then it offered you the chance now to hop into the market, to join the momentum, which eventually tumbled to the downside. So in this green candle, that's our order block. So this is where we're going to be looking for short trades. You see, this is a H4, which is our time frame that we focus on, we base our trades on, right? So I'm expecting price to push up into 96. I'm expecting price to push into 96.50, or you can say, what is the low on this candle here? what is the closing price? It's very easy, guys. You don't have to crack your head on this. So that's my weekly. Let's see what's the opening price there. You see 97.45. So that's, we are looking at the 96.50. That's our institutional price zone. So I'm expecting price to correct a bit to the upside into this price area here before we get another strong push to the downside. I'm sure this is clear as daylight, because you can see what's happening in this market. Major moves are happening going to the downside. There's weakness in dollar right now, right? So we have a drop, correction, drop, small correction, drop, small correction, drop, and a small correction, drop, small correction, drop, small correction, drop, small correction. So the correction time, that's when you should be hunting for short trades, right? So I'm expecting, you see, then we had another drop here. I'm expecting another correction now into this new level of supply that has been created. Remember, a bearish market creates new supply zone when it's strong to the downside. A bullish market creates new demand zones where you look to hop in, where you look to join into the momentum. So just to summarize the dollar index analysis, which is the crucial analysis that we have to look out for, because the other three assets, they'll all be based on dollar index. So if we are expecting further weakness coming in on dollar index, that means we're gonna expect also bullish movements on Euro USD and gold, and you expect the yen to be bearish in the coming week. So for dollar index, the 96.40, 96.50 price areas, they're gonna offer us better chance to start hunting for bullish evidence on Euro USD and gold, and hunting for bearish evidence on the yen. So now let me just quickly summarize what to look out for on the other assets. So we're gonna start with fiber. We're gonna start looking at Euro USD. So now with Euro USD, from a monthly point of view, you can already see it's the opposite. It's the opposite of dollar index. We had a strong rally from a demand area. We had a strong rally from a strong level of demand, which is coming in at here. This is our demand zone, you see. So we had a drop back into the demand zone, and we had a rejection of lower prices, meaning prices turned bearish from the 1.07 price area. So now we are looking for bullish evidence. We are hunting bullish trades on dollar index. Now from which zones now that we are hunting bullish evidence? Now I did highlight to the mentorship, there is levels that you should know, you should be hunting sorry, there is levels that I shared with you in the group that you should be looking out for when you're hunting for long trades. But these are the ones to consider from a weekly point of view, right? We've got this zone here. Reason why? it was breached here, price broke above, you see, level of supply broken above. So when price comes back, you're hunting what? Long trades. But now this is a weekly time frame. I'm gonna go down to a daily time frame so that you can clearly see much better range to look for your long trades. There, you see, there's your order block, right? So it's in this area here, right? So we've got $11, right, which was breached to the upside. Sorry. A reason why I focus on the body of the candles, guys, is because that's the big money there. You see, that's where we have to focus on. Focus where the big money is. Don't focus on where retail traders' money is. It's not gonna move the market. Most of the institutional money is shown in the body of the candle. So this zone here, the one I've highlighted, this is where we're going to be hunting for long trades, right? So expect a small correction to the downside before another push to the upside. Yes, but you must also anticipate market just opening with a gap, probably a gap to this area here, and then shoot. You see, it shoot to the upside. So now that price zone here, the $11.70 and the $11.35, that's the area that we need to hunt for long trades. Remember, we're expecting weakness in dollar index, so it's the opposite when we talk of Euro USD. We have to expect bullish evidence when price reaches this area. One thing you also have to do, guys, is all these price zones that I'm marking, mark them on your charts, then you monitor. You see, you don't always have to be stuck on the charts. No, that's not gonna work. Mark these levels, and then after like every 4 hours, which is our time frame, that means you have like maybe 3 or 4 times that you have to monitor your zones on a daily basis. You see, you don't want to be stuck on the chart. That's when you end up looking at a 5-minute chart, at a 1-minute chart, then you start scalping, which is not good for you. It's not sustainable. So now I've highlighted the zone that we are looking at on a daily time frame. I'm gonna drop down to a H4. Now you can see we have our daily order block that we are monitoring, but now we also have this order block on the H4. Remember, market is pushing to the upside, right? When market pushes to the upside, what levels are formed when market is pushing to the upside? New demand levels, right? New demand levels are formed. So this area also is gonna offer short-term entries to the upside. The ones on a daily time frame are the ones we should base mostly on our trades, you see, because sometimes the short-term ones on an H4, they can be breached because market will be hunting for liquidity on a daily order block, you see. So the H4 order block, sometimes it can be breached, but eventually price will retrace. That's when you get to see that you'd have been right in your trade decision, but you get breached, and then eventually market goes your direction because it would have been hunting for liquidity on a higher time frame from the one you've been trading in this instance, which is going to be the daily time frame. So our order block, the one between $11.7 and $11.3, is the most strong order block, which we should be looking for long trades to the upside. So this is what I'm expecting the market to do on Euro USD. Now let's look at gold. Now we're going to look at the precious metal. Bam, ba, bam, ba, bam. Right, so the same applies on gold. We are going to be looking for bullish evidence. We are going to be looking for bullish evidence for market to push to the upside. Now let me see, where am I? Right. So this is a monthly chart. We have now breached the 1589 price zone. You can see we have these charts in the group. People know about these levels here, 1589 and 1545. This is where we were looking for bullish evidence, and you can see in the past 2 months it offered us almost 2 opportunities to take the precious metal to the upside. So now we rallied into 1673. Our highest high is coming in at 1692. That was a high of March so far. And if we look to the left, there's nothing much interesting that we can say can stop price reaching out for 1780. There's nothing that can stop gold momentum to push to 1780, but it might not happen in the current month. But with the market conditions that we have, yes, there's strong case for gold to keep rallying to the upside. So now we have a strong bullish momentum on gold on the monthly. That means we can basically see that, okay, we are in a strong bullish order flow. So now I'm gonna drop down to a weekly time frame, because it's gonna offer us levels that are quite interesting for us to look at. So this is a weekly time frame. You see the price action that's happening here. We had a push to the upside, then a strong push to the downside. Following week, we pushed again to the upside. Take note of this opening price here, which is 1653. Take note of that price zone, 1653, and the opening price here, 1643. Take note of those levels. So now I'm gonna go into a daily time frame, right? Right, now I'm on a daily time frame. Right, there is another interesting price area there, which is our 1580. You see our 1580 zone, and then this 1643, we can precisely measure it all the way to 1635. So in this range here, right, this range, this is the area that we have to look out for bullish evidence, right? We have to look out for bullish trades in that price zone, which we're gonna take all the way to the upside, probably to 1700, right? You see, those are the price levels that we need to look out for. There's also the 1660, which is coming in at you see the high of this candle here. Let me just quickly highlight it. You see that high? That's also a good area to look out for long trades. Remember now with gold, yes, you have to anticipate huge moves. But if you look at the price action for gold, right? This is a daily time frame. Let me go to a H4 so that I can explain this much better. You see the wicks. You see the wicks on this candle and this candle. This wick and this wick. We just say these three. It definitely means market worked both sides of the equation, both sides of the market, the demand side and the supply side. People were taken out, you see, by the two closing candles of Friday, or probably by the second last candle of Friday's close. You see, people were taken out. So you need to be in a position to know that, okay, when you are trading gold, it's a case of targeting. Yes, there's nothing wrong in targeting 200-300 pips on gold, but that is if you get in at the right zone, you see, which is the one that I've highlighted here. You see, you can see price dipped in that zone for the first time, then it rallied all the way up. That's 500 pips. But now, if you are going to take it from the 1660 price area, make sure you're monitoring that trend, because market can spike to the downside or it can spike up 200 points, and if you're not monitoring it, you're going to lose those 200 points, because it can even spike to the downside again. So now with gold, just be careful for now until we close way above 1680, right? So we're going to be hunting for long trades from 1653 and 1635 price zone. If price dips down here, you expect this zone to hold and then price pushes to the upside. So finally, let me quickly look at USD JPY. Right, looking at USD JPY from a monthly point of view, you see we are also reaching, this is interesting, that's the 105.33. You see, that was the area we were looking for long trades. We had this level marked long ago. So the 105.33 is offering opportunities to go to the upside. But now remember, USD JPY, if dollar index is bearish, expect the yen to appreciate in value. Now on the chart, it's going to be bearish, right? But that doesn't mean the yen is weak. No, it means the dollar is weak. Remember, take note of this. So expect further downside movement coming into the yen, targeting this level here. Expect further downside movement. 101. 101.10 is now under threat on the yen. And with the coronavirus cases escalating, expect the yen to appreciate in value. Remember, yen is a safe haven. So where are you going to be looking out for short trades? Now, major moves happening to the downside. Which one was our last down candle here prior to this drop? This candle here. So you see 106.27. Mentorship, you know this level. I highlighted this level for you guys. 106.27. That is the level that you need to be looking out for short trades. Now let's go to a weekly. Right, there we go. You can clearly see now. Where is our 106.27? This is when the demand zone was breached to the upside and we had a strong rally. You see, we had a strong rally to the upside. So now I'm expecting, I don't expect bulls to have power here. You see, yes, there is going to be a small correction to the upside before market keeps on tumbling to the downside. That's my focus, guys. That's what I'm focusing on, the yen. So now we've got our 106.27. We go to a daily time frame. You see, now we also have another interesting level here, but now I don't expect it to go all the way, unless if there's major positive news coming out regarding the corona issue. This will be another good area for short trades. And then we've got this area here. You see, we've got this area here to look out for short trades. Now this is on a daily time frame. Yes, this order block is going to offer us a better chance. There's no way we can miss 50, 60, 70 pips from that order block if price retraces to the upside. Now let's go to a H4, then you can clearly see. There we go. I need to extend this guy here. Oh well, be that as it may. Be that as it may, you can see now the levels that you should be hunting your short trade. Expect a small correction to the upside. 106.27 is going to offer us good rewards to the downside. You see? The 106.27 is going to offer us good rewards to the downside. Let's say, for instance, price comes back to 106.27. 106.27. Back to our closing price of this week. You see, that's almost 90 pips, which is highly possible. And if it goes all the way to our daily order block, which comes in at 107.12, a further drop to last week's closing is on offer, almost 180 pips. So now these are the levels that you need to look out for, guys, on the yen. So we're going to be looking for short trades on the yen. Unfortunately, the video ended up being 42 minutes, guys, but it's so that I explain much better, so that you can understand what I'm trying to put out to you guys. So expect further weakness coming into the USD JPY pair, meaning USD JPY is strong, right, and dollar is weak. So yeah, that's pretty much about it for today, and let's see how the following week comes through. Yes, market has been up and down, but it did offer good opportunities for those who know what they were doing in the market. And with that in mind, I wish you a good trading week and a great week. Thank you guys for watching, and the guys in the mentorship, if you have any questions, let's discuss on the Telegram app. And for those who haven't subscribed to the channel, just click the subscribe button below. And if you want to join the mentorship, you can email us, WhatsApp us, or send us a message on our Facebook page. We'll be glad to have you around. So yeah, thank you guys, and good luck.